Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss a Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
Yeah, dude, I'm excited for the Spaces. Hopefully, we got a couple of our speakers coming in here in a minute. I can roll through a couple of the biggest news stories that I saw today. We thought that would be, if you think that would be helpful. So, first thing starting out, Tesla, Elon Musk tweeted talking about that he is excited to hand over the first production cars made by Giga Berlin tomorrow. So we're getting the start of Tesla deliveries from their German Gigafactory starting tomorrow. There's been a lot of hype and speculation around this one. Cool to actually see it happening. I'm also seeing some headline from Reuters talk about trading in Russia's Moscow Stock Exchange is remaining halted and remaining closed. Now, I did not get to see a timeline or anything too deep into this one, if it was just today or going forward or, indefinitely. So we'll hold off on that one to go further, but I was seeing that it was supposed to open today and it did not. Continuing to move on, a couple other decent stories. China regulators ordered Microsoft, their search engine Bing, which, who uses Bing? But that's a different story for a different day. China asked Microsoft to suspend Bing's auto-suggest feature in the country for a week for an undisclosed reason, is what I am seeing, and that was from Reuters. Moving on, I mentioned it very, very quickly. We have Nike earnings after the close. I'll give you the expectations in a little bit, but yeah, actually, I'll keep it up there. Verizon and Live Nation, they announced a little bit of a new 5G technology partnership. I'm envisioning, you're at a Live Nation concert, and the VIP section or whatever it is has 5G and other 5G enabled stuff. So we'll see that going forward, see if that turns into anything. This one actually did go a little bit under the radar, and people love video games. I see we have Catherine up here as well, a fellow gaming enthusiast. Sony announced the acquisition of a company called Haven Studios. So maybe we actually circle back on this one because it's not one I was too familiar with, and I know Catherine, like I said, is a gamer as well, so maybe she'll have some insights there. Actually, what am I even doing? Catherine, first of all, hey, how are you? How has your day been? How's your Monday? And do we know anything about this Haven Studios company that Sony acquired?
Okay, I'm not going to even try to pretend I did not see that story at all. So now I'm going to have to dig into it. But I've been so focused on Boeing that that didn't even cross my wire, to be honest.
Yeah.
I hate being that person, but I wish I had more for you, Evan.
No, listen, Boeing, that was a huge story today. And honestly, I see why this is taking your entire mindset. And the Sony one kind of snuck in under the radar. I didn't see a price for it, which means it's not going to be that huge. So I definitely understand why we're doing that. Quickly, while we're here, do you want to explain a little bit about the Boeing situation?
Yeah, so I've been covering it over on the Streets Action Alerts Plus, which is our portfolio that we have for members. And obviously Boeing is a holding there. So we've been looking into what this means for the holding that we have in AAP. Right now, there's not a whole lot of details. It seems like a 737-800, which is completely different because I worry about this, completely different from the 737 Maxes, dropped altitude fairly quickly, according to Flight Radar. I actually retweeted the original tweet this morning, and we're not sure on the state of casualties, at least from the last time I checked, about 30, 40 minutes ago, but about 132 people were on board, and it went down in China.
I saw some video today. It totally could be real, but it was just like shocking. It was literally just going straight down in a line. And I didn't want to retweet it or anything because I had no idea if it was true or not, but that was a truly shocking video, what I did see.
I haven't seen that, but that does back up what Flight Radar 24 had on the flight.
Fascinating. Appreciate that, Catherine. As always, love having you on these spaces. I'm going to do one or two more of these news stories from this morning, then I'll pass it back to you, Goblin, and we can go wherever our amazing host wants to take us, the king of spaces. Shout out to the Wolf account that's up here as a co-host as well. The man behind the Bullish Rippers account right now, always hosting top-class spaces. But one or two more things. This one's not necessarily a news story, but a big thing to be looking out for tomorrow. NVIDIA their CEO, Jensen Huang, will be speaking at their keynote tomorrow at 11 a.m. Eastern. I would expect a lot of headlines coming out of this one. NVIDIA is a popular company that knows how to grab headlines, and these keynotes are a big deal always. So definitely watching that. And then last story, and I'll throw it back to you, Gob. There's an interesting story from PayPal-owned Venmo talking about how they're hiking fees on crypto transactions for that are of up to $200. So which I would guess a majority of transactions on websites like that are smaller amounts. There's just a bunch of them, and so they're looking to raise fees on that for Venmo. There was a little talk earlier of like, why are you buying crypto on Venmo? That's a completely another story that I don't have the answer to, but there is that. But they are raising the fees, and with that, I will throw it back over to you, Gob.
Sounds good, man. Yeah, we've been doing a lot of this market madness stuff today. If anyone hasn't had a chance to see that, just take a look at the Wolf timeline, and it is all over the Wolf timeline. So I've been very focused on that, but the market has seemed relatively flat. We had an initial burst this morning, came out hot. We had the quick turnaround, and then we've kind of traded sideways. Matt, I'm not sure if you had a chance to, run any more calculations with hedging pressure, but typically Monday likes to set a little bit of tone for the week. What are you thinking here?
Yeah, so I'll give a little bit of information about that. I apologize if it's loud. I've got the housekeepers are here, so I hear vacuums behind me. But so for today, actually, we found kind of a systemic bug in our app, in that we didn't account for holidays for monthly expirations. So we did not account for this month's data pull for it being a Thursday for expiration instead of Friday. It's the first time it's really ever happened, I think, in the history of our app. So we didn't get our monthlies, which is what we were direly waiting for right out the door. But I do have backup calcs that I run in case that ever happens. So we're going to get that fixed. So tomorrow I'll have the numbers again. We were pulling data from the 15th, and clearly, we're all off work and markets close that day. So, but I guess that is what happens in development. You can't think of everything all up front. So what we do have as far as the index and VIX areas to look at, those came in really nice when the market came in and looked really nice at the open. I ran the 3 of those in my local hosted model, so I could actually pull the data from a different place just as a backup. The SPY itself actually was very, very market bullish right out the door. Just like we had on Friday, we were talking about how the positional structure was bullish and the hedging was also bullish. So when you get like a double boost, right? You have the market has gapped up into an area where bulls have more risk on the table than bears. We call it the bull side of the market. And then you get that second boost of having more longs towards hedging than shorts toward hedging of the dealer offsetting, which we call hedge pressure. So you have double boost of bull side and long side hedging. So it's basically all things are bullish. And SPY ran out the door, ran up, and looked like it was going to do great. Looks like it was going to stabilize. The other thing about that was that there was nothing in the way. There was no resistance. Nothing looked bad. QQQ had a very similar setup as well. So we were kind of hoping we'd wake up and see all signs of S&P and Qs looking great. And actually trying to load the graph up right now to get you some numbers. 345 was that key level for hedge pressures on Qs. Much of today's activity has been selling, I'd say, but we'd still held above that level, which is still pretty good. And we haven't really had a kind of a gamma squeeze or systemic sell-off, because you're going to get that little bit of volume that's coming in from hedging. So 345 held like a champ. That's exactly what we needed, but the bull side was lost. So what you're kind of seeing is, while the market has exhibited some selling pressure, we're still holding that risk on that. Why did we sell, but why didn't we sell off? And exactly what I'm going to my next point, and today was a volatility move. Powell speaking, of course, but in reality, just Friday's move was a squeeze into monthly expiration, right? You started seeing a lot of people unwinding massive put positions, which started causing that squeeze up, and you weren't seeing people really get into new calls as much as we thought it would. We were just seeing people get out of puts. They were taking profit as fast as they could, and the market melted up a little bit. But S&P did open also on the bullish side, and we hadn't seen that in 2 months. So for our calculation, we're really excited to wake up today and hopefully see a bull continuation. We didn't think we would rally today, but what we did think was we'd see a day like today where it was volatile but didn't sell off, which is great confirmation that for the rest of the week, as long as we're not seeing high volume come into selling, we'll actually start seeing the market become liquid again. Right now, I think people are just waiting for risk to come back on the table so market makers can accurately price all assets. So right now, we're just kind of waiting for people to start making bets again, and the market's going to be quiet for a while. Today was a test in volatility. What ends up happening on our calculations on the other side of the coin is that VIX itself can be an instrument that's traded, right? So VXX is what we look at, or VIX options. You can look at any one of those. And the VIX itself can be hedged higher or lower based on the same thing. People buy VIX products to hedge the positions they'll have in the indices themselves or other stocks. So when VIX starts to push itself higher, the fact that the volatility in the moment could be higher, the options prices start to reflect that, for the options pricing models that are market makers are used to quote options. So people are forced to buy options at bigger spreads, higher IVs, and the risk is a little bit higher, and the market can just get a little crazy because volatility is increasing. So what we saw today was exactly what I like to call the elevator, jumping in an elevator. Elevator's falling, and you jump up in the air. You kind of feel like you're floating for a little bit, and maybe it takes a little longer to land on the ground. But I guess in physics, that really doesn't happen. But you would think that it would happen. You would feel like something's falling. You're actually, sparing the talk about things, you're actually falling at the same rate. But long story short, you feel like the floor is falling while you're falling with it, and it's falling a little faster than you. And it's just doing that until it can find that breadth of that range to find where the support and resistances are. So the S&P and the Qs needed to widen today just to find where buyers and sellers are. Market makers are testing the volatility and liquidity, and I think that's all today was. VIX just popped above our hedge pressure level we talked about this morning. 24.75 on VXX was a key level, and that just caused the width of the market to get wider. But it really didn't go anywhere, which is kind of what's expected. I think tomorrow is going to look exactly the same. We don't have any indication the market's selling off, and things still look pretty stable. We're going to have to look at a longer-term view of volatility, how the market absorbs further bad news, such as Russia conflict escalating and anything related to FOMC. I think my theory now on FOMC is that we've absorbed all the bad news and the Fed can't possibly make it worse. We've already accepted and priced in the fact we're getting all the rate hikes we're getting, and that the QT is going to be what it is. Market didn't find lower lows, and so because of that, people mad rush to take profits on their short trades going to expiration. All we need to see now is that enough to kick the market slightly over the hill into bull territory. And honestly, this is the second day we woke up with bull structure. So I'm actually excited to see the market tomorrow and the next day, which Wednesday is always an expiration day as well in SPY and QQQ. So we might actually get another run up or run down come Wednesday. I think I expect tomorrow to be another day like today. We'll have to kind of stabilize and settle out. But other than that, I mean, those are the only three I had. Some runners I was playing today. I longed SPY and QQQ calls at the dip, but I got out right when it V'd right back up. I made a couple posts about that. It's pretty common after you have a short squeeze into expiration to see what I like to call a volatile relaxed day where the market makers are testing liquidity. It means they're going to span it as far as they can up or down, test the range, find buyers, find sellers, and then revert back to mean. And that's what we saw. And those are always great scalp opportunities. I kind of was talking about that this morning. Made them both, got out right before it followed, and then that was it. I bought some Bank of America too, but I decided to get out of the position at the same time I got out of the S&P and Q because I didn't really have all my calculations for it. And I just didn't, when I knew S&P was going to sell off, I just got out of everything I had and closed all stuff down. So I actually didn't lose anything on that, but like maybe $20. But that's kind of my take on the market. I really don't think I think the bear thesis is over. I think that the market, if it becomes bearish, it has to take a longer amount of time to do it, quarters, if not the rest of the year, and it'll have to work its way lower just like it does in any other recession. If we're going there, it doesn't go there from here. I'm very, very convinced that we find some way back up to the top over the first half of the year. Maybe we test the highs, and just like recently when we just tested the lows and bad news didn't take us lower, the same thing goes in effect when we test highs, and if good news doesn't take us higher, then the market will likely unwind further. But all recessions in history, if we ever go there, which I don't think we will, again, in my opinion, still have to have a bubble that pop. And I wouldn't call what we're in now a bubble. I would call it like a balloon you just started blowing up. So I don't think the bubble's formed yet. And I don't think there's enough buyers in the market that are long exposed and ready to squeeze to get kicked out of the market. And the labor market's improving. And the logistical bottleneck is debottlenecking. Things are getting better. So I don't see an economic bear case. I can see inflation turning into hyperinflation, and then the bubble pops. And that's a longer term bear thesis for me. So that's all I got.
Awesome, Matt. Appreciate the in-depth insight there. Good to hear that you don't see this as the bubble popping so soon. Good stuff. Let's bounce around and see what else we have. Some opportunities for Power Hour. Danny, what have you been trading today? What are you watching in Power Hour?
Let's go. Let's take a quick look. So actually, I only took one trade this morning. I took AMC. My long entry is over 118, but I saw an opportunity with and the move on NVIDIA last week. AMD really lagged. So I was able to catch, I think, 3 points this morning to the upside on some 118 calls. So that was a pretty good trade, but that was the only day trade that I took. However, I am watching into the close a bunch of things. So let me go down the little bit of a laundry list that I have. Metals look really good today. So the ETF ticker is XEM. I've got NEM on watch. That chart, actually, let me call that up. That one looks pretty decent. It's already triggered an entry for me, but it's now back over its prior high from June. So that one's looking actually pretty good. Energy also bouncing today. That's ticker XLE. You can take a look at Chevron, ExxonMobil, ConocoPhillips. Those are the three big names that make that up. So we're seeing a rebound in the energy plays. URA, I know we've been talking about uranium for a while. I really like CCJ. That's up 6.7%. I did have a trigger entry over $28 today, so wanting to see where we close. It looks pretty good. Did hit $30 and started to pull back, but still looking pretty good on the day. Copper is another one. COPX is the ETF. My favorite name out of that group is FCX. That's Freeport McMoran. Had a trigger entry over $46 last week. That's coming back up to that 1272 extension at $50.65. It did hit close to that level last week on the 4th, actually 2 weeks ago on the 4th. And we did sell off back under my trigger and took shares back over. And so wanted to see if we can crack $50, maybe today, possibly, but certainly this week. Do have earnings not until April 22nd. So that was copper. Lithium, ticker LIT. I like LAC. That's Lithium America Core. Nice falling wedge breakout today. It did stop right at the swing high anchored VWAP and pulled back, but I do have a trigger entry over 29.50. That one looks pretty good today as well. And the last sector is the defensive sector, which had pulled back and is starting to move again. So that ETF is ITA. And the names that I watch or have been watching on there, and I've taken trades, but on that nasty pullback, I basically stopped out of everything. But RTX, which is Raytheon, I took that back over 92.34. NOC looks really good today as well. That's Northrop Grumman. My initial entry over that was 408.21. We're at 446 now, back through that 1618 extension to the upside. And LMT, which is Lockheed Martin, it's got a nice bull flag breakout today, back through the 1618 at 439. Initial entry on that was 395. So those are the sectors that look really strong today. And these were the names that kind of won, with that rally last week. They were lagging and also pulling back a little bit, but now with tech struggling today, we're seeing a nice rotation into those sectors and into those particular names that I mentioned.
Okay, very interesting. Yeah, I mean, that defensive sector is still super interesting, right? With it seems like tension's actually piling up today. I just got notification that Biden announced Russia is declaring some cyber attacks against the U.S. Are you looking at all at cyber?
I was watching Crowd for a little bit. I've been adding slowly some shares. The thing is, I liked it over 193, and it looks really good. However, it's struggling with this 382 retracement at 206.91. So I'm just nibbling here. I'm not necessarily taking day trades, but for a long, yeah, I absolutely like it. CrowdStrike for me is is the one that I would go to in the cyber defense. And we're also post earnings. We're above that power earnings gap up, peg candle or peg anchored VWAP. We do have a little bit of supply up above around 211, but I think once we start seeing daily closes over 211, this should really start to move pretty quickly. I have possibly a move back up to around 241. That's the 618 retrace from the prior swing high, swing low. And that's right around where supply starts to pick up again. So I think if we can clear and hold over 211 this week, and I think 241 is certainly in the cards.
Okay, awesome. Keeping an eye on that. Brad, I saw we got you back up here as well. What's going on, man?
Yeah, about not too much. Just start news this morning. Subaru named them as the first partner to kind of collect near finished goods and options through Upstart's underwriting algorithm. So, I mean, we've gotten Subaru, we've gotten Volkswagen, we've gotten Toyota, all these massive OEMs around the globe announcing partnerships and deepening partnerships with Upstart. So, auto is supposed to be at about a $1.5 billion run rate this year. If leadership has been as conservative with that guidance as they've been over the past year plus, and if these partnerships are any indication, it could there could be some upside there, and the momentum honestly has just been really strong and exciting for me. And again, or not again, I shouldn't say, but I own shares of this company, so I'm obviously biased and a cheerleader of it. And do your own research and see if you feel the exact same way, and don't just listen to me, please. But so far that the signs for this product taking off are extremely positive. And I mean, we've gotten commentary from Dave Gerard, who's the CEO, over the past 2 weeks, saying he thinks this auto business is going to be their largest business, and I quote, by far, over the next few years. And they're already at over $1 billion run rate on unsecured personal. So it's exciting to think what this business can look like if Dave Gerard's ambitious goals come to fruition like they have in the past. But again, long way to go there. So far, so good, but always a long way to go, and always risk and uncertainty. But that was really the only big piece of news. I'm still digesting this Boeing crash that came earlier this morning. The supply chain within commercial aviation is very complex. There's dozens and dozens of third parties that handle every single individual piece, and I need to read more into what malfunctioned and whose fault it was. But honestly, with the string of bad news and bad acting that Boeing's had over the past few years, and that I have expected to turn around a lot faster than it's actually turned around. If this is another 737 MAX type incident where it's negligent on Boeing's part, I'm not saying it is. I haven't read enough into it yet, but that could be a sign to me to say goodbye. I mean, I kind of have fallen in love with this global duopoly and the supply constrained global duopoly that Boeing and Airbus exist in. But at the same time, the lack of competition has kind of shown itself to create a sense of complacency, a sense of arrogance almost within the company that they're still dealing with. So I'm not saying that this crash was another sign of that. I need to see whose fault it was, and first, and I should have led with, I hope everybody is okay, and that this was as non-deadly as it possibly could have been. But need to read more into that. So bad news for Boeing, good news for Upstart, and that's about all I have on this fine Monday morning, or Monday afternoon. Feels like Monday morning to me, but yeah.
Crazy how you have bad news for Boeing, good news for Upstart, and that's the first round matchup in Market Madness. Danny,
let's go.
Oh, is it really?
Wow. Yeah, of course. And Brad, I don't know if you've seen some of the videos of that plane crash. It's pretty nasty. It was like dropped from 30,000 feet to about 3,000 feet within like 2 to 3 minutes. So it was a nosedive straight down. So I don't believe at this moment there are any survivors, and the crash site looks really bad. So obviously thoughts with the families of the fallen there. But yeah. So on UPST's side, I think that Boeing's they had a pretty good after the 737 issues. They've been pretty good, but I'm with you on that. I think it's really hard to be in Boeing here. But yeah, unfortunately, you know, that's just what it is now. But UPST, I like what I'm hearing here. I think what I'm hearing is the dark horse, I think.
Not so dark. See what happens. Hey, except for that Tesla second round, looking good. All right, let's see what else is going on. Catherine, I want to bring it back to you for a second before we pop on over to Dylan and Danny. I know that you have to kind of hop around and back, but feel free, obviously to hop back on and everything. So, Catherine, we seem to be at a bit of a standstill where we're getting pelted with so much news every day that it's almost become the norm, and it feels like it's almost like harder now for news to move the market. Do you feel this way?
I do, to a certain extent. I feel like and I think that that's part of like what's going on globally, because it's much harder to just focus on the market when you understand that, like, okay, well, it's not just the market anymore. It's what the Fed's doing. It's what is happening over in Russia, Ukraine. It's, as we've spoken about a couple of times now on this spaces, the something like a crash for Boeing. There's so many different global scenarios that are playing into what we're seeing that I think it's hard to concentrate on what truly, like, if there's not one strain driving the market. So I agree with you there. I do think that it kind of depends on the investor, though, because if someone is perhaps more long-term or just more focused on their single portfolio, then they can probably drown out about half of the news stories, right? Like that's kind of where, that's my only point of disagreement, but largely to your point, I completely agree.
Awesome. Thank you. I appreciate the insight there. All right. Dylan, what's going on, man? How are you approaching this market?
Yeah. So I think I'm just going to provide briefly, because I don't ever have the luxury of talking up here as much as some of the other wonderful speakers that I see up here. So I'm grateful for the opportunity. Thanks. So I really do focus a lot on the micro and macroeconomics, right? And what does that exactly mean? So I focus a lot on Fed policy, economic data from the macro perspective, and then micro, I focus on my individual companies that I buy, and what are the secular forces that are driving them. So for me, what I ended up seeing here, from like a macroeconomic perspective, obviously, inflation is the story, but Jerome Powell did end up talking today, which is likely what ended up creating the sell-off that we saw at about 9:30 this morning. It was as soon as he released his statement, the market just absolutely dipped. So that was to be expected, especially with the weakness in tech, because it seems like every single time Jerome Powell talks that you end up getting some sort of reactionary forces within the bond market as well as in the equity markets. So one thing that's really interesting that's developing out there is that we continue to see flatter and flatter yield curves, especially when it comes down to the 2 and the 10 year. I believe it's underneath 20 basis points right now. And that essentially is signaling a potential for an upcoming recession within the next 12 to 18 months. And I think that what it is important for investors to understand, and this is from an investing standpoint, is that a lot has been priced into the market so far, which is why the federal funds rate has not necessarily lifted up much more than 25 basis points. Well, at least that's going to be the target range, right? 20.25 to 0.5. A lot has been priced into this market. So I think that that's exactly why we ended up seeing the price action that we did last week, is because we got a lot of clarity. So when the Fed does provide that clarity, I think a lot of investors were able to buy a lot of the long duration risk assets that we ended up seeing. So like the growth stock names, the tech stock names. So if inflation does continue to abate within the coming weeks and months, we are likely to see a massive growth stock or technology first type of rally, especially if there's going to be a slowing down of the economy, which is becoming more and more likely. And yes, I understand that the jobs market is showing that everything is strong, because I think that that's kind of the narrative that Powell's trying to push to ease investors' minds. But realistically, it's a tightening monetary environment, which is going to tell us that we are going to continue to see sideways chop likely for the entire year. Because if you think about it from an evaluation perspective, with the S&P 500, right now it's trading at a forward PE of roughly 18. If a recession starts getting priced in, then obviously valuations will start coming down. So with a forward PE of 18 currently, and then the nominal or the median PE somewhere between 13 to 15 on the S&P 500. This tells us that we're a little overvalued. So what we're likely to experience here from a broader market perspective over the course of a year is pretty much just sideways chop. And as far as the sectors that could stand to benefit from it, if you take a look at the business cycle and a lot of the things that are going on within the late stage bear market, I think that we actually ended up seeing this trade last week. We saw a lot of consumer staples, financials, and technology actually rally, which is going to start signaling that we could potentially be in a late stage bear market, especially if there are any sort of signs of inflation abating. So keep those sectors on your guys' radar. But otherwise, from a macro, and I mean, we're about 20% off the highs right now, 18 to 20% off the highs with the NASDAQ. And I think that we're out of correction territory in the S&P 500. So I guess that's all I'm really seeing right now. I did end up buying Upstart and Snowflake today. That was one of my two buys. And those are long positions, 5 to 10 year holds.
Okay. I really like that approach to the market. I certainly do like the opportunity of scooping into some of those long-term holds here, but I definitely appreciate you taking us out on like the macro scale stage. It's not all day trading here. There's certainly a lot of other ways to add, but yeah, Dylan, great having you on the stage. You always have a great presence and a way of explaining what your strategy is. So certainly, if you're interested, we'll get you on these more. All right.
I think you cut out a little bit there. If you're interested?
I was just saying, if you're interested. Me.
Okay.
Someone's trying to call me. Sorry.
I think
there's someone trying to call me and they're like not taking the hint. So yeah. Someone's trying to call me. Again. All right. Hopefully they'll stop trying to call me. All right. A Stocks 92. What's going on? Talk to us about what you're looking at in Power Hour.
Hey, how's everybody doing today? So this morning, I had AMD calls from last week that I swung. I closed this out this morning, took another scalp in the morning for profits, and then played the downturn on AMD. Facebook, I entered puts at basically 932 because I saw strength in the Qs and the ETF, but Facebook was moving down, had low volume. Obviously, it helped to increase the sell-off to my target of 210 once the Qs reversed as well. So that was a nice little play right there. Like Matt was saying earlier about the way Gamma and the market, him and I think very similarly. So, don't need to repeat a lot of what he was saying, but I kind of have the same sentiment, waiting for the market to settle into its new quote unquote acceptance where we want to trade at for the next couple of days. So as a result, I've just been sitting on some iron condors for SPY and SPX, expected some sideways chop. Got a little nervous there when, the Fed talked about raising rates and we dipped, but we came back to the mean. So close those out for full profit today. Long term, I know Nike has earnings today. I don't like playing lottos, but seeing the trend and talking about supply chain issues and talking about them being on the other side, they've been in a pretty long downtrend for 6 months. So I bought a call for 1 month out for 140. If they have a bad report today, all right, I'll maybe they'll revert back a little bit, but didn't want to take the risk on a 1 to 2 week play, so I took a month out. Went small, obviously. Talking about defense sector and the plane, that's my job full time, so I have pretty good knowledge about that. Can't share what's going on right now with some of the investigations, but it is a little bit of a concern in terms of Boeing, so I'm also staying away personally from that. And then for long term, as a 2 to 3 weeks out, just looking at some of the macro things, so seeing if we turn a more positive gamma, as I like to call it, and see if we can continue into this bull trend for the next couple of weeks, possibly. I'm still looking at energy sector. I like ENPH as my favorite ticker, and Sunrun. They've gotten beaten up after their earnings. They like to bounce off their 200 MA for the last couple of years. So I'm just waiting to play the bounce again. Energy sector is pretty rotational and cyclic in terms of the way it moves. So that's about it.
Very cool. Very cool. Yeah, definitely agree with you there when there was that dip around rates, but I always look for the fake out of the fake out of the fake out, right? Got to go one way then the other and then back. That's typically so I always try to wait a little bit there. But good stuff. Appreciate you contributing.
Thank you.
Absolutely. All right, Evan, we're about 25 minutes to the close. We've gotten some great initial comments here. Happy to dig in a little bit further to any of them, maybe to throw and see if there's some specific names that are running here on the day. Any topics you want to touch on specifically? And also, are there any stocks making new 52-week highs today? Because I always like when you point that out.
Yes, 52-week highs. Let me go to the list. I should just put this out. Overall, with what I want to talk about, I know we do have Nike earnings coming, but we could talk about that in 20 minutes or so. So down with that, down to wherever you want to throw us here. 52-week high list. We got Berkshire Hathaway, United Health, AbbVie. Also, keep in mind a couple of these might be all-time highs as well. I just find more stocks on the 52-week high list and tend to report a little more. Deere, ticker DE is another one. I know Occidental, OXY, became a little bit of a FinTwit favorite, or at least got a lot of talk on FinTwit. That's another one. And then Regeneron, mostly I'm seeing a lot of oil plays, a lot of risk-off plays in 52-week highs, though.
Okay.
Conversely, let me check the 52-week low list while I'm here. And then I'll throw it right back to you. 52-week low list, we got nothing really. The largest stock is $2.3 billion market cap, some company called Live Oak, which is a bank. So nothing really on the 52-week low list today.
Okay. Interesting. All right. So I'm looking at the market right here. Still decently flat, ARKK is somehow down 2.8%, even though Tesla's up 2%, which seems a little bit weird. Have they been selling off any of their position, Evan?
Not in Tesla, not recently. The last week was a very, very slow week for them. Specifically Thursday and Friday.
Got it.
3 trades total.
Got it. Cool. No worries. Let's
see
wow. Here.
Bullish.
What's up?
Bullish. Wolf, I know you're into football as well. The Falcons, who traded Matt Ryan earlier, just agreed a 2-year deal with Marcus Mariota.
Oh.
Bruh.
So they're really just tanking.
Bruh. Are we just shuffling shit quarterbacks from one team to another? Is that what's going on?
I guess they're just accepting the tank. Hey, it is what it is, I guess. Yeah. Okay. All right, Big O, what's going on?
Not much. How you doing today, buddy?
I am doing good. What have you been up to? What have you been trading?
Man, this morning the market was great. Well, I held some SQ, Dollar General, and AMD over the weekend. Just ripped this morning. I'm going to cut the reversal back to the downside. Right here at the end of the day, it's basically consolidating. It's making a symmetrical triangle. So there's really no direction. Of course, you can hop in that trend line. A lot of tickers doing the same exact thing. They're just burning time here. If you look at SPY on the daily 4 hour, it's retesting pivot. So that's the consolidation we need. Otherwise, the market's extremely extended. You got 3 or 4 green days on SPY there, and this consolidation is really what we need to see the next push up. The good thing is it's holding support. So I say the market probably pushes up in the morning. So just be ready for that, unless we get another day of consolidation. But it's looking pretty good. So Tesla, of course, has made a pretty good leap since the last time we talked. I'm really surprised about it. Of course, I'm glad as well. I'm sure a lot of people that are holding glad the market started to pick back up here. And you had Powell come in and knock everything down. But a lot of things, they stayed above the low of the day, which is a good sign. It's a bullish signal. So, but other than that, everything's going pretty good.
So, what's your favorite names right here going into tomorrow?
SPY, Amazon, Tesla. For the smaller ones, tech starting to pick up, and oil. We saw a little bit of money going to oil this morning. Of course, it's kind of hit or miss. So I'm liking AMD. Affirm's starting to pick back up, and PayPal got a long ways back up. So we're consolidating, starting to make them higher highs, higher lows. So it can make a big run back up. If you look to the left side of some large red candles, and price can quickly move back to that range as it starts taking out stops. SQ, still like it. DG, I still like it. And Costco. Costco is almost a target. If you look at Costco and DG, compare them on the month. Large red candles are coming back through there. And that pattern, if anybody's an action or price action trader, that pattern is money on any time frame. So we still got quite a bit of ways to go on Dollar General, but boy, it's moving quickly. So that's probably going to be some of the ones I'm looking to swing. I'm looking to get back in them too. So,
what's your pivot points on Tesla?
let's see. Quick on SPY, just looking at SPY right quick. That stops at 440. We're going to target 448 and then straight to 458. On Tesla, pull it up right quick. On Tesla, the target's 952. We bounced off that level. Right now, it's acting as resistance as we consolidate right here at the end of the day. But that's the level it's got to break. So 950 breaks 950, we can see $1,200 again pretty quickly. Now, if it breaks and retests, we're going to go back to the downside. But everything's still bullish right now. It's bullish until it ain't, right? So I really like that. Affirm is the same thing. It's consolidating, making higher highs, higher lows, bouncing off a pivot currently, but we could see it push up. The key level for Affirm, AFRM's $43. That's a level we need to break.
Okay, keeping my eye on those. Any other thoughts from a macro perspective?
Yeah. So macro, I like going to SPY every morning. So as soon as I hop in the room, the first thing I'm doing is looking at SPY because everything basically follows that same pattern. We got a lot of stuff turning up, and the good thing about on the monthly, weekly, we had some good sell-offs, but now the last 3 months, we're starting to see higher lows. So they're all beat down, but the higher lows is a bullish signal. And some things have already came back up 50%, 60%. Trying to go outside a month. I don't think we're going to have enough time to get there, but we could go 2-2 next month come the 1st of April here, which is a really good sign. Again, look for the tickers that have the large red candles that are coming back through because they're going to be the first ones to recover because that price action is clean and there's a lot of stops to run. I mean, you want to anytime you're looking for reversals, look left. That you want to really target. I want to hammer it home. You really want to target the cleanest price action come back through there. If you're looking at a ticker and it's chopping, you don't know what direction it's going, don't trade it. Like skip it. There's so many other tickers that are super clean. If you're trying to guess which direction, just skip it. Just keep it simple.
Love it, man. Yeah, great words there. Thank you, Big O. Appreciate you being on.
You're welcome, brother. I appreciate you.
Awesome. Okay, so real quick, for anybody who hasn't already figured this out, my name is Gav Blacksburg, and I run the Wolf account. It's not up here for a second because I'm using it to create the next space because I'm doing about 12 hours consecutive spaces today. But with that being said, I do get to do 2 spaces a week from the Bullish Rippers account. Bullish Rippers is exactly what it sounds like. You come to here to find bullishness and rippers in stock world. And the posting is done by Stock Market News, my co-host. It's awesome. Take a look through the posts. They perform really well. He puts out great content, original content. There's comedy in there. There's investing news, so much more. And he does those. He also does a long-term investing space every week. I do a power hour and typically a market-specific sentiment space. But this week we're going to do a market madness space. So much to learn from this account. I've gotten confirmed we are doing a giveaway at 20K. So definitely make sure that you are checking out the Bullish Rippers account. If you're following one of us on our accounts, this is a great account for you to be checking out. Now I have a couple more questions here, but Stock Market News, anything you want to add on to that?
Perfect, dude. Big shout out to Wolf Financial when the account is back up here in a minute. If you enjoy the spaces, make sure you're following that account. And Rippers, also huge shout out to all our speakers up here, Catherine, Danny, Matt, Dylan, Big O, A-Stock, for making this such a fantastic spaces. So big shout out to them. Make sure you're checking all of them out. And yeah, Wolf, that's good from me. And back to you.
Perfect. All right, Matt. I'm just going to go around with everybody. I know we gave a lot of names earlier, so I'm going to try to make my way through everybody before close. So let's do like 2-minute sessions here. 3 favorite setups going into tomorrow.
I think tomorrow, I honestly want to see a little bit more strength in the banking sector. I saw last week, while a lot of things are moving really fast, it wasn't. I was expecting to see a little bit more. So I think if we do get any kind of push going forward, I think that we want to see at least that going forward. And we haven't been seeing bullish setups in banking. I think it's one of the limiting things that's been keeping the market from growing. And obviously it's just sensitivity to what's going on with the Fed and interest rates and such. So That's what I want to see. Bank of America is the stock I've been looking at. Of course, just the sector in general. Other things that I think were looking good. Last week, I was really heavy into Walmart and into Costco. I really like how they are just really strong technically. As far as any specific reason, I am not very versed fundamentally into why they would be doing better. They just open with nice bull setups straight out the door, and I was longing them pretty much all week last week. So really solid plays. Maybe Danny or someone else might be a little more versus to a little more fundamental reasons, but I didn't really do anything other than just blindly ape into them on technical reasons. So they were winners. Can't complain. The other thing I'm looking for, and again, just seeing where money just rotates back into different sectors, I kind of want to see energy as a whole. I think has seen a lot of rally and a lot of move. And today and yesterday, we've been seeing a little bit more climb up. The XLE is showing that. So I kind of want to see oil stocks, I guess, stabilize. And when they do, that would keep people from really just piling all into those and going into other things, which I think will bring the S&P out of this flat spot. So I want to see that top off, not really long or short, just kind of stay put, give people the confidence in the market staying valued as it is. And then, of course, just things not selling off, inviting people back in. My other, I guess, sector that I'm looking at, I like AMD, I like NVIDIA, and NVIDIA is my pick for the Market Madness tournament. And I just think that, those are going to be good signs of the logistical debottlenecking and the chip shortage. I think that NVIDIA, if I had to pick one company that really represents transportation problems, manufacturing problems, and the kind of the residual fallout from COVID, I think it's NVIDIA. I really think that you can see how there's so many different things that are affecting that are affecting that company's ability to make graphics cards fast enough, or Xboxes, or whatever you think. It's an expensive product people want, and people are willing to pay double what it's worth on eBay. I want to see that if those companies start doing well in light of everything else, then I think all of them will do well. Those are the ones with the biggest bottleneck because they have chip shortages, they have high demand due to, I guess, I don't know, they use it from Bitcoin mining, I hear, and that like for the computers. And then I hear, of course, people are staying home, still working from home, needing graphics cards for Zoom or for anything else. So clearly the demand for the products there, and the shortage is the worst, I think, of most of the things. So that's kind of my benchmark to where if NVIDIA starts doing well, which it has been, then everything else in that boat's probably going to do well as well. They're the least hindered by it. So those are my calls. Pass them to you.
Perfect. Let's bring it on over to Dylan. Dylan, I know you're more of the long-term investor, but feel free to weigh in. Yeah, I know that for tomorrow, so on a weekly basis, if you take a look at the markets from both the S&P and the NASDAQ, what it looks like is that last week we saw a couple of follow-through days, which is probably going to likely tee up a nice green week. So I wouldn't be surprised to see tomorrow green, and probably going to be bullish for technology. It really wouldn't surprise me. And the number one reason why I think that is that there really is no economic data. Jay Powell's not supposed to talk again for I don't even know how long, for the next coming weeks. CPI data is still pretty far out, and I think it's like 3 or 4 weeks away at this point. So in essence, we're basically trading on technicals and sentiment. And last week, that was very bullish from both a technical and a sentiment perspective. And then even if you take a look at the S&P 500 as well as the NASDAQ on a weekly basis, you can actually see the MACD start curling on over, which means that it's probably going to start reversing. And then just from a trend perspective, wouldn't surprise me to see a test towards the all-time highs. Like I mentioned before, saying that, yeah, it's probably going to be a flat year for the most part, but that doesn't mean that, the NASDAQ needs to finish 20% down. So there's a lot of meat left in this rally, in my opinion, especially on the technology side of things. And if you are a long-term investor out there, I think that this is going to be one of the most wonderful years for, especially if you understand the businesses that you're buying. I think it's going to be one of the most wonderful years that you'll ever have for the next 5 years to accumulate shares of your favorite companies. Love the enthusiasm. Yeah, I'm certainly thinking that now's a great time. We had that huge run up, and it kind of became oh well, are we gonna get a continuation from here? Are we gonna have just this pullback for years? But we just gave it all up, so now we get the chance to run it up again, right? Yeah, I'm pretty sure that I am 80% sure. Obviously, the 20% is because we're the financial markets. but I'm 80% sure technology bottomed out. And if you actually take a look at a couple different graphs here, you can take a look at ARK-K. What it actually ended up doing is trading all the way down to the September of 2019 highs. So this acted as a very major area of support. This is 2.5 years later. And although I know that Cathie Wood, there's a lot of bearish sentiment around her right now, we have to really think about what category the algorithms, like the financial institution algorithms, are keeping ARK into. And it's going to be mid-cap growth stocks. And mid-cap and small-cap, and even in some cases, large-cap growth stocks absolutely got hammered for the past 4, 5, 6 months. And this is obviously going to be due to macro factors as well as just general investor sentiment. We were pretty overextended in February and November. So when you take a look at those technicals, you see that it's clearly bottoming. I mean, there's really no doubt to it. I wouldn't be surprised to see a sideways chop or even a short-term rally. And then even if you take a look at the Sky ETF, which is going to be indicative of a lot of the software stocks, and this is really where I find a lot of my secular growth stocks at, that's also in very major areas of support there. So you definitely want to keep your eye out on those. And the valuations are so reasonable right now. I mean, I know that a lot of people are bearish on growth stocks and are saying to themselves, like, growth's out. But hey, when everybody else is saying that these secular compounders that are expected to grow 30% plus for the next 5 years is out and they don't want anything to do with them and they're trading at really great valuations, sign me up. I'm going to start plowing cash into the markets.
Yeah, I'm on the same thought pattern as you. And it's good to continue to hear. And you put up a lot of content about what you're buying, right? Do you still do a lot of YouTube?
Nope, it's all going to be Substack. It's really all more Substack, fitting right. Yeah. Just because I have a 9-to-5 job, and it's very, very hard to record YouTube videos and edit the videos. So Substack is a lot more suiting, and it's actually a Substack, like a newsletter / podcast. So I'll actually do like an audio version to a lot of the Substacks and explain what I'm seeing out there in the markets and my favorite growth stocks that I really like.
Love it, man. Appreciate you being on here. All right, we've got 8 minutes left here. Danny, checking in with you once more. You still on? All right, hearing none. Let's go over to A Stocks 92. What setups do you like? The top 3 setups going into tomorrow?
Yeah, so somebody else touched on this earlier. I also like banks. In particular, Goldman Sachs is my favorite bank to trade. The most liquidity usually I find on that bank. I like its fair market value around 360 to 380. Personally, it was too high above 400, but it's been struggling along with the whole bank sector for the last month or two. Somebody else mentioned it earlier. I forgot who. So I'm also looking at Goldman Sachs going into this week to gain some strength. Disney, I'm looking at shorting it a little bit more. Showed no real relative strength today, even though the market did have some ups and downs relatively. It just kind of moved flat for most of the day, opened and closed essentially where it's at. So I'm looking to continue its downturn. So I'm looking at some puts to the downside for Disney. Mentioned earlier playing Nike for a month out. I know they have earnings, so it's kind of like a long-term earnings play, but I bought a month out for it just to give myself some time. PLTR, like he was mentioning, with short term and short cap and small cap and mid cap getting obliterated. PLTR has had troubles holding this 12 range for a couple of months. For the past couple of days, it's been holding it pretty well. So I like to see it continue its trend. Personally, I only hold shares for it. I don't buy calls. It just calls and puts. It just moves too weirdly for me. I just like to scalp in and out for shares. So I want to see it hold in this 12 range, 1250 range, so I can scale in some more for the next couple of days. And then meme stocks, I hate playing them, but anytime they have a big run, I like to play them to the downside. I let everybody else have their fun with it. I don't like, and then I'll eventually let it retrace. So just look at those for a quick downturn play, usually for fun.
So you sound a little more bearish going in tomorrow.
Short term, yes, because I'm still long term bullish. But short term, what I mean by short term, I mean like next 2 to 3 days. I'm thinking more or less bearish / chop / in this range of acceptance on the SPY. And what I mean by that is between 442 and 446 is what I predict will be the new acceptance until we find a new range to break out of, whether up or down. So in the interim, I am a little bit more bearish.
Okay, I hear it. I hear it. All right, and Big O, coming to you. I mean, we kind of touched on this with your positions that you like, but I know that you gave pivot points on both, and you like to take the upside and the downside. But going into tomorrow, do you feel more bullish or bearish? All right, here none. Let's go over to Wolfie, who came
Oh,
up.
sorry
What's up?
about that.
Oh,
Sorry about
okay.
that.
What's going on?
Oh, not much. I'm out here working my yard. I'm sorry. I'm trying to multitask. You were saying something about the pivots.
Do you feel do you feel more bullish or bearish going into tomorrow?
I'm thinking. Well, we had a big run up, 3 or 4 days of just a straight push up. We got a consolidation, which is a good thing for the rest. We're making higher lows, but we're sitting right on top of a pivot right now. So it's either going to break and continue, or it's going to expand the range, and we're going to go back and start chopping a bit longer. It's hard to say. It's hard. It's hard to say. Some stuff's still pushing up. If I had a bet, I would say, I say right here, I say we gap up in the morning. That's what I'm going to guess, and that's exactly what it is. It's going to be a guess. But I I don't know. It's really hard to say. I'm so used to letting the candles tell me what they're going to do. I still think it's too early to call the bottom. I can tell you that. There's a lot of stuff setting up out there. I hope that we continue to go higher. I always like it when the stocks make a new highs, but it's really just hard to say. And I know I'm just kind of saying the same thing. I really don't know, to be honest with you.
Oh, good man. Never need to make a pick when you don't feel comfortable or feel sure. And
yeah.
I hear you. Good luck with the yard work too. Okay, let's see. Yeah, Evan, I see we have Nike's earnings. Yeah, we could do till 4:15. Wolfie, what's going on, man? What have you been trading in this market? What are you watching? What setups do you like going in tomorrow?
So it's just rotation back into Grandpa Boomer names. So today I traded scalped Oxy. I didn't have a position. It broke out a very long term, very very long term important point. It broke out of that like 58 level. So that one was one that I was watching. I tried my luck with AMD this morning. Didn't get much out of it. Got a run up to 117, but I got a little too greedy on that one. So didn't really get as much as I should have. Otherwise, I mean, we just had a run up on the market in general. It ran basically in a straight line. The S&P ran from 419 to like 445 in a straight line over the course of like 4 days. So it's important to see where it failed. It failed at the 200 day, and then if you take a look at the Qs, same kind of setup. Ran from 319 to 350, basically 351, basically in a straight line, and then stalled out at the 50 day. So in terms of tech, in terms of like what worked last week, I want to see some consolidation and then possibly some resumption. If you can get some consolidation and then have some of these oil names, some of these metal names, some of these year-to-date leaders pick up the slack until then you can have a market where you have mean reversions on beaten up names and these grandpa boomer names running and leading at the same time, and that's kind of like a healthy thing to see happen. So that's pretty much it. I didn't really do too much today. After what we saw last week, just kind of unloaded some winners, had some healthcare stuff like BMY. So just unloaded some winners. Took a shot on Oxy, like I said. Got a little lucky there. Took a shot on AMD. Should have booked more, but ultimately, a win's a win. So we'll just take it one day at a time, see how it consolidates, see if it breaks through, see if there's continuation or if we just fade.
Okay. Yeah, that's pretty fair. So nothing wrong with taking some profit on some of these different plays. Are there any like world events that are factoring into like specific plays? Like we talked about looking at the defensive industry, we talked about the cyber industry, we talked about what happened with Boeing. Anything else kind of factoring in for you?
Yeah, so a lot of aluminum names had relative strength today because of Australia. So, Australia imposed an immediate ban on exports of alumina and aluminum ores, which are really pivotal for Russia's production. So that ban alone kind of like squeezed a little bit of production there, and that gives you a little relative strength there. So that was one. I mean, more and more of the same though, honestly. Like we're in this period where we had, such a beaten up move to the downside on some of these prior winners and some of these favorites, and a lot of it is relative to like tariffs, a lot or not tariffs, excuse me, sanctions, and what's going on in Russia. When people are afraid, they just kind of like sell and figure it out later. And then in terms of possible catalysts moving forward, like tax season's in a month, and I'm kind of curious to see what happens ahead of that. Like, are people going to sell more so they can pay their taxes? Because I'm pretty sure a lot of people have to pay taxes based on last year's market, or if is it going to be a non-factor? Outside of that, I'm just paying attention to see how this Russia-Ukraine war alignment kind of shakes out. I know we saw some headlines about India possibly buying oil from Russia. And so, you just kind of want to pay attention to them. They're not really a driving force, in this precise moment, given where we were just 5 days ago and where we are now. I think most of what we're seeing right now is a little bit of digestion based on the back of some of those moves. But yeah, you want to be cognizant of that. You want to be cognizant of what's happening in Russia and Ukraine, and also like what's happening between China and Taiwan, moving forward. And a lot of people like to believe that what's happening in Russia, Ukraine is kind of like an open door for China potentially to take some action there. So you want to just keep these things, in my opinion, on your radar. But ultimately, this is a lot of these moves that we saw today with some of the bigger winners are just continuation of winners that have been winning all year. They consolidated while tech bounced last week, and then now you have this re-rotation. So that's kind of like what I'm looking at. It's kind of like how I'm viewing it. I'm sure there's a lot of macro stuff that I'm missing. I'm not a macro guy for the most part. But one other thing that was interesting was General Motors had a Chinese import business that they had a headline for today. So I just want to, I don't have too many details because I didn't read too much about it yet. But that's something that I want to pay attention to as well, because it seems like China's trying to bolster some sort of, or not China, GM's trying to bolster some sort of branding in China, which is pretty interesting, especially given that I think it was NIO this morning that said that they weren't going to raise prices in China. So I want to pay attention to some of these headlines, but for the most part, just kind of a consolidation period and see if this move that we got, this bounce that we got last week in tech was for real or not.
Yep, definitely good points. I think everybody's kind of waiting to see if that's the bottom, right? All right, stock market.
Yeah, one last thing that's going to tie into your thing is, obviously we want to pay attention to Nike here in 10 minutes because they're usually a read through to the consumer, and they're one of the major consumer brands that has pricing power. So they have a lot of flexibility with how much they could raise their prices, and it doesn't really affect their consumer or customers as much as other brands raising prices. So I want to see if that still holds true, if the consumer's still buying with Nike, or if it's just if they say anything negative on the back of the COVID stuff in China.
That's exactly where I was going to take us with Nike. I did put out a tweet out, so I just wanted to mention it in the spaces as well. We are going to be covering Nike's earnings live. I know Wolfie is also a fantastic person to have on these spaces and everyone else. So excited for everyone to chime in with thoughts as we get to those numbers. But they are expected to be out at 4:15 p.m. So we do have about 10 minutes. Whatever the topics we get into, I know that, but. Yeah, cool. And actually, let me give you the numbers what I'm seeing for expectations. But yeah, Wolf, what were you saying?
I was going to say, while we have a second here, I just want to remind everyone that there's 10 minutes until these earnings are coming out, but it only takes about 5 minutes to shoot your shot for free for $10,000. If you take a look at the Wolf timeline, and I'll go ahead and I'll pin a couple of these up top, just so you can see the people that are participating you'll see a ton of people participating in the Market Madness tournament. This is a one-of-a-kind, giant spin-off tournament of March Madness. Go to marketmadness.co, marketmadness.co. It is the quickest submission you will have for $10,000 in a long time. We're doing a ton of other prizes too. Again, it is a giant bracket, all based on social sentiment. The entire bracket will be decided via Twitter polls. So if you're a Twitter person and you like social sentiment, you like talking about stocks or crypto or NFTs or anything, ETFs, futures, commodities, we have it all in this bracket. It's worth at least taking a look. It works on both mobile and on desktop. Bullish Rippers is a co-host. Wolf is the main host. Pounding the Table is also co-host. Sponsored by StockTwits. Go check this thing out. Several hundred people have already submitted today. I recommend that you go ahead and get your submission in ASAP while there's still time. So that is only open this week. And you can see all the pin posts up top. You could go to the Wolf account. It is the link in the bio. And yeah, I just wanted to put that out there in case anybody hasn't had a chance to check that out yet.
Yeah, I just wanted to comment quickly on that. I'm really excited to be doing this with you guys as well. This is going to be an awesome, awesome tournament. So if you are in here, you can literally just click through this button. You can just hit random things if you wanted, but it's the chance to win $10,000. I think that's worth at least clicking in, checking some of it out. A lot of really cool stuff. But yeah, super excited for this. Make sure you check it out.
What's up, Wolfie?
Yeah, I put up write-ups for some of these earnings moves, and I actually did one for. I put one of them on Nike on my site, so I pinned it to the top after your bracket. So if anybody wants to know what's expected and all that stuff, I know Evan was going to jump into it, so I thought it'd be a good place for people to follow along.
Perfect. The one other thing, Evan, while we have like 3 minutes here, Evan, pull up a random number generator because we didn't pick this during the last call because there was just so much going on with the brackets, but we ran a $1,000 raffle giveaway for the past week. And Evan, if you want to run a random number generator and just click that a few times and then give me the number, do it we had 663 people that signed up on the wait list, and we can pick a winner for $1,000.
All right, so I'm going to do 3 clicks, and then should I record my screen or something while I do this?
You don't know who the people are in here, so I trust you to just do 3 clicks, and then there's no way you don't know like anyone's corresponding number.
Okay, that's fair enough. Okay, so first one, so I'm going to do 3 clicks, and then the fourth one is going to be the winner. So we're going to have 3 huge losers who just missed out. So that's going to be a big L.
All right.
I would like to hear who they are after. First one is 44.
Okay.
Second one is 8. And third one is 124. These all feel really low, which is weird. And then last one is, the winner, 659.
Wait. 659 is the winner? Wow. So someone from today.
659. So is this someone who signed up first or last?
Last.
Okay.
This is going to be someone from this morning's space. Oh, that's not true. Because I randomized order. So
I like that you did that.
Yeah, I have no idea when they signed up. In fact, you know what? What if I ran? You know what? I think that's good. I think you said 658. Right? 659? 659?
659.
Okay.
659.
All right. I'm not going to give away like who it is because it's an email address. But like I don't want to put an email address out there, but like we have a winner. We're going to contact them. If they're okay with us sharing, we'll publicly post like their Twitter username. But I will send them an email. Cool. Awesome. All right. So we have about 5 more minutes till earnings, and then we will get rolling with that. Oh man, what a week of spaces too. Has anyone seen how many spaces we're doing this week? We have like 23 spaces. We've been live on spaces since 9:30 a.m. Nonstop. We took a 7-minute break at one point, and we're going to be live starting at 5. We'll be live again until 9 p.m. or like 8:30. So definitely keep an eye on everything going on. Excited to get in these earnings, and then have a couple of calls, and then our 5 p.m. But so much going on here. All right. What else do we have? Anybody else want to chime in? Danny, anything you're looking at with Nike earnings?
No, Nike's not the type of stock that I usually trade. I was just taking a look at the chart when you guys mentioned it about 5 minutes ago. Obviously, it's been in a bit of a downtrend. Had a death cross back on Valentine's Day. So happy Valentine's Day on that death cross. But the sell-off has been it's pretty much been going higher and higher. So looks like from this last downtrend line, we did break that Friday and putting in a spinning top today. So what I would say is if we do get positive earnings, I would watch for a move potentially back up to 144. That's where our big supply zone is. And it looks like it possibly could make a move. We do have the 50 SMA there right around 139. But I don't normally trade it, so I don't really understand like the personality of the stock, but just looking at it from a technical standpoint, looks like on good earnings 144 could be in the cards.
Perfect. Taking a look at that. Well, anything else you want to add on from your write-up?
I'll just give me 1 second. I'm gonna pull it up and then I'll be able to go over it more clearly.
Yeah, give us all the stuff there. I would love for you to go through what the analysts are expecting. This is honestly just a quick note with earnings. There's a lot of stuff. There's a lot of caveats. That's why earnings are so hard. It's first of all, the conference call is equally, if not more important than what we're about to get. So you always have to wait. Also, weirdly, the first move is wrong a lot of times. But yeah.
So they're looking for.
Wait, one last point. What's really important. Sorry, I did lose my train of thought. There was a long pause there, but I got it back. Bad. But what's really important is the expectations, and it's not necessarily the numbers in and of themselves. It's how they come up versus what was expected. So that's why I think it's really important. So I'd love for you to go into it all.
Yeah. So on an EPS basis and revenue basis, they're looking for 72 cents a share and 10.6 billion. That's basically 2% year over year. Then they're primarily looking for, outside of that, how much elasticity they have, on the back of pricing, being pricing power. So gross margins is a really important way to measure that. So gross margins expanded by 280 bips last quarter to 45.9%. You can call it 46%. This was an example of how impressive and how strong Nike's pricing power is, it allows them to increase their prices and then offset any drop off that they saw on the back of the consumer being exhausted or being stretched or whatever. So you want to pay attention to that. From a multiple perspective, they're trading at 22 times forward, which is pretty reasonable for a stock like this that's allegedly still growing. So it's kind of like what you want to pay attention to. See what happens after they report, see if that number compresses or increases. And then outside of that, you want to pay attention to any weakness in China, which is one thing that they highlighted last quarter. They highlighted that some of these stop-starts in China affect them there. And obviously, they've just shut down in two of their bigger cities in China. So you want to see if that's had any impacts. And then the last part is you want to see if they've had any impacts or any further positive impacts from some of their Vietnam operations, which is what they were doing on the back of COVID. They were trying to get more production out of other places, and Vietnam was one of the strong ones. So that's pretty much it. Outside of that, Under Armour just reported recently, and they highlighted the resurgence of COVID and supply chain issues as reasons for why they came in light and they didn't exceed. So anything positive on Nike's front that shows that it was an isolated event for them is something that would be benefit for Nike. And then the last thing you want to pay attention to is full year 22 revenue growth. That's set at 5.4%. And a full year EPS of 362. So any commentary around there would be really stellar and should be coming any minute now.
Quickly, the Vietnam factories shutting down for Nike was a big topic in the last couple of earnings and was starting to improve. So that will be a very big thing. I'm going to see Nike in a second right now, but yeah, definitely look for that. I know Nike's story in the past was a supply chain one. That's what's been really the drawbacks over the last couple quarters. So yeah, definitely agree on that topic, and I'll be watching that. But honestly, Wolfie, I don't know if these Chinese closures happened during the quarter. I think they might have happened after, honestly. So we may be.
So I'm mostly talking about forward. But yeah, you're right.
Yeah.
It happened tail end, but
I'm
we'll
seeing
see if they say
$10.9 billion of revenue, up 5%. So you were saying the guide was about 2% growth. That's at 5%. So I think that's a beat. And then
let's go. I got earlier. I don't know if you guys were here about an hour ago. I was saying I got 140 calls for next month. Nike's currently 136. So I expect some retracement, but that should open up nicely for tomorrow if it holds.
Wolfie, do you have any of the numbers yet? I see $10.9 billion
still,
revenue.
Yeah, so I got Q3 prelim of 87 cents versus 72 cents. So it's a nice beat. And then 10.9 billion on revenues versus 10.6 billion. So again, a nice, slight beat on revenues, but still a beat nonetheless, given everything that they've gone through.
I'm going to lift the forward guidance quickly. I know that's always very important. Did they not give forward guidance? Wait, let me just look.
Sometimes they give it on the call, so we'll see if they have or not, but sometimes it comes on the call.
I'm digging into their release right now, just looking for that. I can tell regions everything, but it tends to be a little more just like number jabble. Here, I have some good stuff. I don't think they gave forward guide at all. Greater China sales was 2.16 billion, which was down 5.2% year over year, ahead of the estimate though. Seeing the 87 cents, and let me just get this tweet out really quickly, and I'll come back with some more. How's the stock moving right now?
It's still holding above 135. It's trading 137 on the ask and
what's the after hours move?
So it's up. After I don't know what the after hours was. It down today? I'm not sure, but in the after hours, so combined, it's up 4%. I'm not sure where it was on the day prior to earnings.
Yeah, it had a wick, came right up to that 50 SMA.
Yeah, so we're up about up about 4% after hours after that.
Yeah, up $6 since the close, basically.
Okay, but yeah, so Greater China revenue 2.16 billion ahead of expectations. North America revenue was 3.9 billion ahead of estimates. So pretty much all the revenues were a beat. Yeah, all the revenues were a beat. Converse revenue was actually a miss. So for anyone who wears Converses, that came in at 567 million, below estimates of 600 million. Gross margin was 46.6%, up from 45.6% last year. I think that was slightly above estimates. Cash and cash equivalents being 8.7 billion, up 2.2% year over year. I am not seeing forward guidance on this. So, Wolfie, have you seen any forward guidance yet?
I'm not. I actually have a delay on mine, so I don't. You've got more numbers than I do. So maybe they'll guide it in the call. It's probably something that they want to do if they want to give color around it. But it looks like though, regardless, that it's a pretty strong quarter compared to some of their competitors. Like I said, Under Armour used a lot of the stuff that's going on as reasons for why they didn't hit their targets, and it doesn't look like that's affected Nike, and that they still have, that pricing elasticity, and they still have really loyal customers. The other number that I like though is direct sales. So direct sales are, if you instead of going to Foot Locker, you go to Nike.com. So their direct sales are at 4.6 billion. It's up 15%. On a reported basis and 17% on a currency neutral basis. And then brand digital sales increased 19% or 22% on a currency neutral basis. And they have 33% growth in North America. So it looks like America and us here are offsetting some of the stuff they're seeing in China with the consumers.
Evan, anything else to go over on that?
Yeah, I'm just still a little confused on the forward earnings. On the forward guidance, normally they would say in the shareholder letter that like it will be on the conference call or something if it's not in here. So I don't know. Maybe they're just gonna say there's nothing, or maybe I'm just missing it. So I was just trying to dig a little deeper for that. Was seeing nothing. So nothing there. And forward guidance is so important. So I think that me not seeing it, and I haven't seen anyone report it. Actually, let me go and check. But if that's not out, there's still a bunch of stuff that could move this stock. And as always, conference call is very, very important. Conference call will be at 5 p.m. EST, so in about 39 minutes now, 40 minutes. So definitely be on that. Definitely important.
They were able to increase their gross margins by 100 basis points, which is pretty stellar considering that one of their largest markets was down on the quarter. So it just shows you Nike has really, really strong pricing power. They're able to offset a lot of the damage that they'd get from geopolitical stuff and from, other issues by, how loyal their customers are and how much they're willing to pay for their Jordans.
Nike is still supply constrained too. A lot of the problems are supply. They were not able to. They have not been able to reach demand over the last couple quarters, and that was a problem they were having. So I think that tells you just it's bad in the short term, but when you think about the underlying Nike, it doesn't mean much for the stock, but the brand itself is very strong. I mean, that means something for the stock, but what it means isn't always direct. But yeah, going around in a circle. But back to you, Gov.
I'm thinking about buying the Kyrie 8s. What do you think?
I don't know what that means.
It's a shoe, the Kyrie.
Oh, I think you said Kyrie 8, and I thought we were going into an NFT thing. Okay.
Well, according to him, they look like crap. So
the Kyrie shoe.
Yeah, he said when they first debuted it, he said he had nothing to do with what the shoe looks like. It's just funny because like a lot of people actually ended up liking the shoe.
Yeah, not gonna lie. A couple of them look pretty off. He's got a bunch of different versions of his. Yeah, some of them are pretty weird, but
some of them
look
cool,
okay.
Though. Yeah, I think you go for it.
I'm looking at that. I'm looking at a couple of others. I need a new pair of Nikes. We'll figure it out. Okay, Evan, anything else for this space? Or we can wrap this one up.
Yeah, no, I think that is pretty set there. Definitely going to say it one more time. Every earnings, this is important. Nike, I would say it's slightly more important than the average one. Not much more. There's a couple ones you need to be on the conference call. There's a couple ones, GameStop, you could just take a walk and do whatever. They're going to say nothing and do it in 10 minutes. But Nike, I'd be listening in there for a lot of supply chain stuff. As Wolfie said, there's a lot of stuff you can read through for Nike to other companies going forward. So definitely 5 p.m. EST. I would be on that conference call. I probably will be. I know we got a crazy schedule coming up, but yeah. So we are pretty solid for the spaces. I know we're going to go into wrap ups, but just before we do, as these people are speaking, make sure you're checking them out, hitting the follow button. Big shout out to all these speakers for coming on the space and make it so fantastic. And big shout out to Wolf for helping us put this together. Gav, the guy behind the Wolf account, and Rippers for bringing us all together. So make sure you're checking everyone out. Really grateful for this stuff. Excited for the full day we got, and definitely gonna have to go through one more little promo on the March Madness that we got going on. Market Madness.
For sure. Danny, any other closing thoughts?
No, I was actually just had a quick session. I'm doing a live charting session tomorrow at 8:00 with TrendSpider, and we were just analyzing SPY, and I'm thinking Jason and I kind of agreed we might see a little bit of a gap up tomorrow. So yeah, I mean we didn't have that strong of a power hour, but nice little push at the end. So going to be watching aftermarket and then see how futures open tomorrow morning. But listen, I think we had a nice week last week post FOMC. You had to expect a little bit of a pullback. We put in a spinning top on the SPY on the daily chart. So, and we actually got rejected off of, I believe that was the 50 SMA, or maybe it was the 200. I think it was the 200 on SPY and the 50 on the Qs. So both getting key rejection or key moving average rejections, but it's only one day, and we had a nice end to last week. So I think one day does not make a week, and let's see how the rest of the week starts to unfold. And as I mentioned at the top of the hour, we have some names that are moving. We have some sectors that are moving, and so my eyes are on metals, they're on uranium, they're on energy, and let's see if tech can kind of come back a little stronger this week. But there are names moving, so that's where my eyes are always going to be.
Awesome, thank you. A-Stocks, any other thoughts?
No, I just want to thank everybody for hosting, Wolf and Bullish, for inviting me, letting me talk. I got nothing else to add. I look forward to working and talking to you guys again tomorrow, the next couple of days.
Awesome. All right, Wolfie, anything else from you?
No, pretty much it. Want to see if Nike says anything on their call. I don't think they're going to say anything to thrash it. It looks like they are benefiting from a strong loyal customer, More of what Danny said though. Just want to pay attention to some of these metals, oils, boomer type names. See if they can pick up where they left off recently, and then see if they could hold down the fort until tech decides whether it wants to resume or trade back lower. Give you a little plug. I made a video prior to Fed week last week. A lot of it's pretty much played out, pretty much in line. We had oversold conditions, and we bounced since then. So I'm gonna do a follow up, give more in depth thoughts. So would love some feedback and input there.
Cool stuff. All right, everybody should check out Wolfie's articles, and big shout out to the speakers that came on the space. One more time, this is the only week to fill out your brackets. It's market close. You're chilling. Take 5 minutes. Take a shot at $10,000. The dude who won last year had no clue this was going to happen. He saw it on someone said it on TikTok. Filled out a bracket. He told me the money was life changing. You just don't know when you're going to win. Again, that is marketmadness.co. It is in the bio of the Wolf account. It is pinned up top. Take a second, fill out your bracket. You never know what's going to happen. All right, everybody. We'll be back on our next space in 30 minutes, hosted by the Wolf account. It's going to be market sentiment and stock picking. Come get all your stock picks that you need for the week. Come get a full dose of market sentiment from professional traders. And yeah, I think it's all going to be a good time. Thank you, everybody who tuned in. We'll chat with you on the next one.
Thank you. See you all around.
Take it easy, Gav. Thank you.
You.